Talk about the U.S. markets then, and more than 1% gains coming in on Monday with the S&P 500 index that's snapping a 6-day losing streak in a sharp rebound overnight. Tech shares were among the day's biggest gainers, with the S&P sector index surging about 2.8% on the strength of Apple's shares. Now, this helped the Nasdaq post its biggest one-day percentage gain since the month of December in 2011. Facebook, however, slumped in its second session after a disappointing debut. The stock sank 11% in trading, dropping to $34.03, well below its $38 issue price. Now, the sentiment improved after the G8 leaders gave verbal backing for Greece to stay in the euro and stressed over the weekend that their imperative is to promote growth as well as jobs.
What about Asian markets and what about other basic indicators? If you check on Asian markets are looking decent. SGX right at the top of your screen. 49.37 for SGX, which means Indian markets at 9.15, they could start gap up. There is enough green on the screen. Kospi up 22 points, and China, which otherwise has been a big underperformer for this year, Chinese markets are also looking strong. They are up by about 16 points. Like I mentioned, the dollar index has cracked, and the dollar index has cracked for 4 days on the trot now. Global volatility, which is an indicator of fear, which just tells you that the kind of positional trade money managers are betting on, that also has corrected. Global volatility, which on your screen is now at 22, which is a decline of 12% in a matter of just 24 hours. So the global setup is very clear. US markets are strong. Global volatility has plunged, and euro is at a 1-week high against the dollar. Let me now bring on board Michael Woolfolk, Managing Director with BNY Mellon Global Markets, joins us live from New York. Michael, good morning. Thank you for joining us. Michael, how would you characterize last night's rally in US equities and European equities? Just a dead cat bounce, nothing more, nothing less?
Yeah, I think that this is a textbook example of a bear market rally where we saw some multi-week, multi-month lows last Friday. Then on Monday, you saw some recovery. I wouldn't get long and expect this rally to continue much further. We are overdue for a mini correction, but I think the market is headed lower this summer.
Michael, hi, morning. What's the view about Facebook, and what's the big concern really after the disappointing sort of debut? And yesterday, the stock sank almost 11%.
Yeah, there certainly was a great deal of hype regarding Facebook going into the deal. I think that there was a bit of a letdown, but then again, we often see that some of the best issues do have something of a letdown in the several days after the initial public offering. And I would not expect this necessarily to be a signal of its performance over the course of the next year. This is, I think, just merely a typical correction from a well hyped offering.
Right.